Good morning. Thank you all for joining us here for our roundtable on From Liability to Asset, Monetizing Carbon in a Warming World. My name is Jeremiah Dutton. I'm a venture builder at InnoEnergy focused on CCUS, more specifically bio-CCUS, driving the project Midstream, which is a biogenic CO2 capturing, aggregation, and supplying. Today, I'm very fortunate to have an esteemed panel here with me, very opinionated already. We've been having some heated discussions, so I hope to see that, gentlemen, coming through. Just to set the stage, we've decided to broadly discuss biogenic CO2 as a focal point here, so not necessarily fossil CO2. We might highlight some of the need for fossil or hard to abate going forward. Just to set the stage though, across Europe, carbon capture, utilization and storage, or bio-CCUS, is becoming essential to achieving the EU's Green Deal and the net zero goals. From Sweden in the north, where I'm from, to Portugal here in the south, governments are launching industrial carbon capture auctions, offering contracts for difference, and trying to help the development of this nascent industry. And while momentum seems to be building, hopefully, maybe cresting for the pure hydrogen play sector, this industry still has a lot of opportunities to help decarbonize Europe, create new green value chains, and to enhance resilience. And with that, I'd like to invite my panelists today, Olivier Sala, Group VP of Research and Innovation at ENGIE, Marco Ferraz, Head of Upstream and Industrial Innovation at Galp, Raphael Vaquier, hello, Director, Energy Advisory and Project Finance at Societe Generale, Eduardo Martinez Granados, thank you, Director at Energy and Infrastructure Finance at ING, and Nicholas Jensen, Business Development Director for France and Southern Europe at INEOS. So, to start things off, a nice softball question for you all. Looking ahead to 2030, and I'll even open it up a little bit further, 2035, 2040, what would success look like for you for the bio-CCUS in Europe? And what role do industrial players have in that?
Starting with me.
Starting with you.
Okay, hello everyone, and happy to be with you today. So at ENGIE, we operate a wide range of energy assets to deliver energy transition at scale. And it's true that we've heard for so long what CO2 was a problem, but it took us somehow a while to realize that it could be also a part of the solution when it comes to energy transition. So among our assets, two types can generate and do generate biogenic CO2, anaerobic digesters to produce biomethane, and biomass plants which generate heat and or electricity. So for many years, this biogenic CO2 was not valorized. And now we've started to valorize this CO2 from digesters to use, for example, in greenhouses to boost the production of plants. Just to give you, if we take just the example of France, the market of CO2 today, it's a bit below, it's 700 to 1 million tons of CO2. 70% of that is food and beverage. 30% is industrial for like cryogenic cleaning, water treatment, and greenhouses, agriculture. Okay? And the good news is that whenever we have a regional proximity, I would say, then this biogenic CO2 is really competitive. It is cost competitive because basically the cost of capture and delivery, it does not include the transport, but the transport, if it's close, it might be 10, 20 euros maximum. It's around 100 euro per ton. It is good news. It's good news for us because it means that it's an additional revenue for biomethane production. And it's good news also for the market opportunities for biogenic CO2. At ENGIE, we're also working on the infrastructure that will be needed to support this emerging, I would say, value chain of CO2. And we're leveraging our, expertise in gas infrastructure for storage, transport, etc. And looking ahead, I think that beyond what can be done now, there's a huge potential. There's a huge potential because in the next decade and beyond, demand for biogenic CO2 will grow a lot due to two major drivers. The first one, has to do with the production of e-fuels to decarbonize notably aviation and maritime transport, because there's no alternative if we want to decarbonize. And the second one is going to be the search for renewable feedstock for chemical industry. Chemical industry today, 2/3 of the carbon footprint is embedded in the product. So the question is not to decarbonize, it is to defossilize the carbon which is in the product. Okay? And when you look at the emerging e-fuel market, I mean, we're talking of big scale. Huh? It's not happening in Europe so much, I'm sorry, but if you look in Chile, okay, in Morocco, in Saudi Arabia, each project, and I have some names, you know, in mind, in Morocco, there's a project, the need is around 900,000 tons of CO2 needed, okay, to produce e-methanol. In Saudi Arabia, there's a big project that is going to be commissioned by 2030, need 6 million tons of CO2. So if you compare it to the whole CO2 market in France, so we discussed about Spain, you think it was 300,000, something like that. Yeah, so I mean, it's absolutely huge. What does that mean? It means that the biomass feedstock won't be sufficient for sure, first. Two, we will need to add some carbon removal technologies to sum up to the volume that will be needed. And in the long run, biogenic CO2 will remain more competitive than direct air capture. So I mentioned 100 euro per ton, which is an average, which is an approximation, of course, an estimate. Okay, you can add maybe 10 or 20, 30 for the transport. When it comes to DAC, it's not the case today, but let's say in 10 years, it should be, depending on who you're talking to, from 200 to 300 euro per ton. So for sure, we will need that, but biogenic CO2 is going to be a strategic lever, and performing the best potential allocation of this scarce resource is going to be critical. But I don't want to be too long, so.
Thank you for that very, very thorough answer. I'm going to jump to Galp. Obviously, you're in the fuel space. Maybe also you want to comment on petrochemicals.
Yeah.
How do you see?
Well, let me give a step back, and what we have on CO2 is a mass balance problem, because actually Galp is a producer and a refiner for fossil fuels as well, and you produce something that was digged for millions of years, and we just release that CO2 into the atmosphere. When we talk about biogenic CO2, we are talking about the shorter term cycle, that it's related to biomass and other products. So basically, and we tell that to our engineers, we need to solve this issue of the life cycle, the mass balance between these two. What happens today is that, okay, we produce a lot of carbon. Let's put CO2 on the carbon side, but carbon is essential for us to produce hydrocarbons, okay? And we are using those hydrocarbons each single day, a natural hydrocarbon, so to speak, and we need to produce a synthetic one. This is one of the markets that Olivier just said to us. And for a company like ourselves, this is a natural space to occupy, to continue the production of fossil fuels and slowly start scaling it down, to start the production of biofuels, which we are doing as we speak, but at the same time, to turn that carbon from a liability into an asset. And to turn it from a liability into an asset, you actually need to put it on a product that someone will be willing to pay for it. At the same time, we'll solve the mass balance issue. So this is where biogenic CO2 comes in, because we have a lot of industrial CO2. We can use that industrial CO2 until 2040, but apart from that, according to regulation, we will need to use biogenic CO2 rather than the industrial one. So again, this mass balance problem that we have in the end. The thing is, when we start talking about numbers, we produce ourselves 2.5 million tons a year. For a normal e-fuel project, you need at least, to come in economically viable, 1 million tons, give or take, and 1 million tons of biogenic CO2 are spread around, and you actually need to grab that carbon, that good carbon, that green carbon that you want to use. So you actually need to provide the market so that people are willing to sell you or trade with you that green carbon that allow you to produce those high valuable products. There's two things here. First of all, you need to incentivize these companies to sell you that green carbon. You know, because if you give feed-in tariffs for them to continue burning biomass, they won't sell you the carbon themselves. You actually need to incentivize them. The second thing is the molecule is the same. It doesn't have colors, by the way. So if you produce 1 million tons of gray and someone produces 1 million tons of green, you need to offset. You can use in your local factory the 1 million ton that you're producing here, and you're offsetting with someone that it's producing the green, and then it does permanent storage or whatsoever to compensate the amount of CO2 that you have. Nevertheless, this impacts two things. The economical part of the project itself, because if you are transporting molecules from one side to the other, you're adding costs to it. And the second part is also social acceptance, and I know that we are going to address that, because you know, if you put a pipeline of CO2 here and there, people won't accept that. So it's much easier, it comes expensive, and it's much easier to convince people on this trade-off in the end.
Thank you very much, Marco. Shifting a little bit to a finance perspective here, the big banks. I'd love to hear how does success look like from your institutions in 2030, from a financier's perspective? Is this the business as usual finally? Is that where we are? We'll start with Rafael.
Yes. So I mean, to me, success by 2030 will be...
Or even 2040, if you'd like a little bit longer.
2030, you know. 2050, I think the first step, a good target would be to be in line with the net zero by 2050 target. And I think I was looking at the numbers before. I think the IEA is anticipating to be at net zero in 2050, 185 million tons of carbon captured by biogenic CCUS by 2030. I think today we are only capturing 2 million tons per annum. About 1 million is used, and 1 million is being stored permanently. I think if you look at all the pipeline of projects, it's about 60 million. So there is still some way to go. Second aspect is by 2030, it will be good to have a first wave of large-scale projects that will have been financed on a non-recourse basis by a number of banks. And I think for that, main thing you need is a good, robust policy framework. And I think the UK is a pretty good example in that respect. So as in my role at Société Générale, I advised the first cluster that reached project finance that reached financial close in the UK. So one cluster of transport and storage of CO2, and the first emitter, which is a CCGT with post-combustion carbon capture. So those two projects raised 8 billion of financing.
Only 8 billion?
8 billion. I mean, even like for any, I think 8 billion is probably one of the biggest financing in the UK ever, or at least in the top 3. Any infrastructure, including any type of infrastructure. And in this context, we are talking about a new, to some extent, some new technology, a completely new market, which is the CCUS market, a completely new business model, a new regulatory framework that has been negotiated between the UK, the developers, and the banks over the last 10 years. So it means that there is, if you strike the good policy framework, there will be some financing appetite. 8 billion is huge, and 8 billion, that was the first one on which SocGen advised, but a few months later you had another cluster on the west coast, HyNet, that reached also financial close. It's a bit smaller because they are reusing a lot of existing pipelines. It's about 2 billion of debt. And then you had, since I think quite recently actually, I know it's not the subject of the cement industry, but there was a first cement producer that reached also financial close that is going to connect to the HyNet cluster. Energy from waste, retrofit, that also reached financial close. And all this because the two clusters reach financial close. So I think the lessons learned to me is you need to get things going to to get the right policy framework to get the banks, to get not only the banks but also the private capital to come in, and then it works. Now, is the UK the only model? Probably not. And I think we probably talk about other business models. In the Nordics, they are mostly relying on penalties on the off-taker sides, which create a market. But what we see is that it's taking much longer, and probably we will come back on the policy, but it's taking longer. We don't see large-scale projects in the Nordics being financed. So the UK is a good example of how to start things and bring capital. And probably that it's not, the UK is looking long-term, they're looking at 2050, and their ambition is to create a CCUS market in 3 steps, basically. The first step is to create the market. Second steps, which we probably see in the next cluster, is to transition to a more sustainable market. Because obviously, I mean, I can talk about it more, but the UK cluster they have a lot of government support to mitigate a number of risks on the storage side and on the price of CO2 side. It's quite a lot of support from the UK. And we're also advising now other governments in other jurisdictions, and maybe they will not all replicate exactly the UK model. And even the UK, they will probably transition to a more sustainable CCUS market with much less support.
All right, perfect. Eduardo, tell us what's happening in Iberia and how success will look 2030, 2035, and when Galp is going to go. He said he was, getting off fossil. I heard it. So I'd love to hear how that financing is
we know
transpire.
We know they are. We are banks as part of this alliance. Société Générale is also in. ING, is helping our clients not to transition. It's not an exit of our relationship of the clients, but it's true that we ask clients like Galp or ENGIE to transition, and we support them with our debt instruments. Through sustainable KPI loans or margin ratchets in case you meet certain targets, etc. But how do we see, the biogenic bio CO2 market by 2030? I would love to be, like in the notary every single week signing project finance deals, But we all know that this takes time, and especially in Iberia, where the biogas and biomethane market is now starting. We know we have a very high potential in the Iberia Peninsula. We rank, I think, number 3 after behind Germany and France, and we are, starting to get there. So I would say, as of now, there is a small niche market for the bio CO2. As Rafael said, we need to create this market. I think we can look at the UK. They have created this market with support from the government in terms of tariffs, carbon for difference, as well as completion or guarantees, or operational guarantees in case the project is not really used. The government will take care of paying the debt. But at the end of the day, I think in 2040 is the time where we will see, in the 2030, 2040 decade, is the time where we will see projects coming ahead, thanks to the, I think, sustainable fuels that Olivier has mentioned, for the development of that industry.
Okay. We're all taking a relatively long-term perspective here, and I did ask for that. Now, Nicholas, maybe a little bit more shorter term, executing today, tomorrow. You're working in France and Southern Europe. How do you see this market developing already today?
Thanks a lot, Jeremiah. As my co-panelist kindly remarked before we started, I slightly changed haircut, as you can see. Unfortunately, our CEO, Vincent, had to leave for a plane, but very happy to be here to discuss among colleagues. So essentially, what do we do in Enosis? We're a startup, very happy to be part of the InnoEnergy portfolio. We're active in France. We're opening up the activity towards Southern Europe, and we also recently opened a subsidiary in Denmark, so we're looking towards the Nordics as well. What do? We're looking at biomethanation as a technology. We're technology manufacturers, so we can provide as an OEM, but we also develop projects together with partners where we take essentially hydrogen, CO2, looking at biogenic CO2, and through a methanation process, we transform it into a different product, e-methane. Very fungible, very easy to consume, same as biomethane, you can inject it into the grid and consume. On that basis, what does success look like for us? Well, I'm going to be a little bit egotistical in this one. Success in the short term means...
Please, go ahead.
Means getting projects off the ground in the next couple of years and until 2030. So we're very happy. We currently have a demonstration plant in the north of France producing 1 gigawatt hour a year. We started it up in March. It's going to run until September next year. We have very good results when it comes to converting CO2, 100% in the process, and we get 99% CH4, so e-methane purity at exit. So the technology works. Then that means what do we see in terms of the market? And the way we use bio-CO2, so biogenic CO2, is essentially on the back of a biogas plant or a biomethane plant. We either use the pure CO2 that comes from the purification process of biogas into biomethane, or we can run raw biogas directly in our plant and in our process. What does that mean? Because many of the colleagues here have already hinted at what does that mean in concrete terms also with regards to regulation. It means that today we focus on these assets also because of the regulation. I mean, we're producing something that needs to be RFNBO certified, that creates compliance markets, that has value. So in that perspective, biogenic CO2 is a very long-term commodity that we can use as a feedstock. In case we need to use other CO2, of course, as long as the purity is right, our technology can use it, but then the question is, does it create a product that has value at the end? And I think here, for me, the fundamental aspect is, by 2030, first of all, we need a clear pathway towards 2040 and 2050. Mm-hmm. We have some targets for 2030. They're not implemented yet, but they provide very good guidance towards where we want to go. And they provide signals to our off-takers, which we need in order to be able to get those projects off the ground, to sign for what we're producing. So regulatory certainty is a big one. In legislation, it's there, but from legislation to implementation, for those who are active in Brussels and abroad, there's a universe of completely different discussions that have to happen. And I think in that perspective, opening up the longer term, and sorry, now I'm going back to the medium and long term, what happens then after 2030, once all of this is in place? Is the market then left to decide everything? And we hope that the CO2 price is in the right place when it comes to the ETS, the off-takers are in the right place when it comes to demand, or do we need a little bit more help in the following phases? So,
okay, thank you. Marco, you hinted at a topic that we discussed earlier before we started, and that was the societal perspective. I'm going to start with Olivier on this, though. Where are we in regards to public outreach on this topic? Do citizens understand what bio-CCU is, what the difference is in regards to biogenic CO2, fossil CO2, its impact, or are they perceiving this as just greenwash?
I think the answer is no, the short version. Why? The good reason for that is perhaps it's up to us to better explain what is at stake, what it means, how does it work. We need some, and it's a part of our roles as a company committed to deliver energy transition. It's to explain, because without public acceptance, nothing can happen at scale. And I think this is very important, especially because we're currently experiencing a kind of backlash against energy transition, which is not really rational, like renewables are so expensive, we cannot subsidize them. It is rubbish when you look at, the way it works. And it's far more competitive to produce electricity from renewables today than any other source of electricity. And other things like, we don't like windmills, For example, there's this famous example in the US. People pretend that the administration not to name the guy, doesn't like windmills because from a golf course it looks ugly landscape, for example, you know. But there's no rationale. All the populists hate windmills. Still don't understand why, myself. So when it comes to bio CO2, biomethane, understanding the value, the pivotal role of biogenic CO2 in the energy transition, we need to have some public space, public debate, so we can explain with, I would say, hard fact, science-based fact, how does it work? And I think it's not sufficiently done today, and I think we should not underestimate this thing, because we know we're focusing on technical, financial, industrial questions, because it's a bit our job. But I think we need to play a role in this explanation if we want things to happen at scale.
Yes, exactly. And especially if we build up on Marco's point, I think I'm curious here. You're talking about book and trade.
Yeah.
Yeah, and that would entail carbon capture and storage. And a lot of people might be concerned about drilling a big hole, putting a whole bunch of CO2 in the ground. There was a film that was popularized in North America called Gasland in the early 2000s. You may have seen it. How do you overcome that?
Yeah, it's. Let me tell you something. We have a very interesting project, European Union funded project called Pilot Strategy. And if you guys go on Google and look for Pilot Strategy, it's actually a very good one. And actually what we do in this project is we take 5 places in Europe and check with different companies, different institutions, Repsol is there with us as well, check places where you can actually store more CO2 in Europe. And that's actually a very good thing to see. And when we started to put the project together in 2020, we actually dedicated a part of the project to know what people knows about CO2. So we started to work with ICS, that it's an institution for social acceptance. And 2 years ago, we came up with this questionnaire and asked people about, do you prefer onshore storage or offshore storage? And guess what? 60% of people, 63 if I'm not mistaken, answered, I prefer onshore. And we said, why? Because there's a risk onshore, you know that? I don't know. I just prefer onshore, because offshore probably might be a nature issue in the end of the day. So what actually this brought us was the lack of knowledge about CO2, about carbon, and about carbon management. Okay, and when we started to scale down from there, people didn't knew what carbon storage was, what carbon transportation was, and again, coming to the same issue, okay, carbon transportation is quite complex, okay? If you use a ship, you might have an accident with the ship, okay? If you use a pipeline, you might have an accident with the pipeline. So, first of all, you need regulation, but actually you also need to have social acceptance, and people need to be knowledgeable about that. And in the end of the day, and to align with what Olivier just said, you actually realize that people don't know what biogenic CO2 is. Why? Because when we started, according to this questionnaire, asking people about what do you think about biogenic CO2? You guys are just using CO2 to produce fuels. No, but wait, it's completely different, because this comes from that part that I said in the very beginning, from nature-based solutions, biomass, etc. And this actually comes from fossil fuels. People did not understand. Just to wrap up, I really think that we need to bring information to the communities. I really think that especially universities need to be the one driving that information. I lived in Australia for a few years, and actually universities were quite popular in this, because if you have a guy from an oil and gas company saying, you know what, I need CO2, I don't know if you're thinking outright. So this is very important for us, to bring information to the general public.
All right, very, very interesting also to hear about how to do that, not necessarily through the corporate institutions that are existing, and not necessarily through the public agencies, but via the universities, having more, let's say, research-focused outreach. Oh, interesting. From a lender's perspective, I'd love to hear, how are you assessing or potentially assessing these future projects? And what are 1, 2, or even if you have 3, what are those 3 critical criteria that you're looking, maybe you can even speak to our partner there on the end, about hitting that financing and making sure that the project flies? I'd love to hear what your perspective is.
I mean, so to me, I mean, there are, again, I think the question is a bit difficult because, bio-CCUS, they have a lot of letters in this term, so there are a lot of potential applications. But I think there are still, in most of them, 3, because you asked 2 or 3, so I will take 3 common risks that you will probably find in all of these projects. First one is the cross-chain risk. The bio-CCUS is a long and complex supply chain. And so you have a cross-chain risk, what bankers usually call a project-on-project risk. It means you're lending to a project, but ultimately you're taking a risk that is outside of your control. You're doing all your due diligence on one project, but potentially another project might fail, which is going to impact you. And that's a key risk that usually bankers don't like to take, or even investors. I'm sure usually they don't really like to take it. So now the extent of this risk depends on the business model. In the UK, for example, they have regulated the CCUS by dividing the transport and storage on one side, and potentially later on they will actually unbundle the storage. But so far it's transport and storage because it looks like a monopoly. And so they have regulated it by an infrastructure business model. And then you have all the emitters that will inject their CO2 into the network. And they are modeled, they are operating under a specific business models. And so the risk is obviously between the two. So if you spend 4 billion into the transport and storage and you have no emitters connecting, or you only have one emitter, which is the case in the East Coast cluster, you have one CCGT which is going to inject 1.5 million tons per annum of CO2, and you have built a pipeline and a storage for up to 4 million tons. So this only emitter is not going to be able to pay you. So you are taking a clear risk. And that's also because in the UK, they have oversized the clusters to be able to, again, to in the future transition to a sustainable market in which there will be a lot of emitters. And at this point in time, probably that investors and banks will be fine taking that project-on-project risk. If you have a little bit like in the biogas sector, your banks are comfortable because in the 50 kilometers around your plant, you have a lot of biomass potential. So you can take a risk that on this project-on-project risk, you can take it. In the CO2 market, you can't take it because it's not a liquid market yet. You don't have many projects, and at the beginning, you have maybe only 1 or 2, and potentially it's not going to work. In the Nordics, they have taken a slightly different approach. Because here you have smaller and diffused ESAF plants in which you probably, again, you're taking a project-on-project risk because you might have only one emitter of CO2. And so far, all the projects that we see are working, and I'm not sure they have actually raised finance yet, but it's probably going to be a financeable risk structure, is usually when you have an energy from waste plant giving you the biogenic CO2. And here you can take the view that it's kind of too important to fail supplier because they are municipality owned. They are the only one in the area, so it's unlikely to fail. It's been working for the last 20 years, so you're fine. But then you still, if I was a banker looking at this, I would still ask what is the plan B in case the P99 scenario it doesn't work. And so you still like to have a plan B. Second risk is the storage risk. I think we talked about it. That's a bit like in the nuclear industry. It's a high impact, low probability risk. So my role as financial advisor on the UK projects was to focus on the low probability side of things. But it's still a risk that, the lessons learned from the UK is that nobody actually really wanted to take that risk. Investors didn't really want to take it in full. Bankers certainly not. Even insurers are not there yet. They are starting to develop products, but the insurance market for CO2 storage is not there yet. And in a country where you have a cost on CO2, ETS or equivalent, taking a risk of putting 100 million tons of CO2 in a store that potentially could get out in 1 out of millions of chances, but it could actually happen. It could put a company insolvent. So they didn't want to take that risk. So this was covered, underwritten by the government in in the UK at least. And probably, again, the next projects might not have the same coverage as the initial one had. The UK is already starting. They are consulting right now on the next steps. They are talking to us as financial advisors on how do you see the market evolving? Do you think investors and insurers will be able to take more risk on the storage? And the last one is price risk. Price risk, in a CO2 is, again, it's not a highly liquid market. It's very volatile. So people are not, banks or even investors, are not going to take a price risk on that. And you have different price risks. You have the supply of biogenic CO2. You have your offtake on eSAF, whether it's eSAF or e-methanol or anything. Usually, it's quite difficult to get a long-term fixed price contract. And so again, you have different ways of solving that risk. In the UK, they have a model of CFDs, which has proven to work quite well. It works on the Net Zero Teesside project. It's been working on the offshore wind space for a very long time. It's a proven framework that works. So even in offshore wind, now you see more and more projects, more and more countries which didn't do CFDs, which are now thinking of coming back to the CFDs. So this is working. You may have different ways of solving it, even potentially contractually, via tolling contracts. But at least, again, the lessons learned from the UK is that you have a framework that has raised already 4 or 5 billions, which is definitely bankable.
Okay, perfect. So basically, ironclad supply, ironclad offtake is what you would really, really prefer to see, first of all, from a potential project. Or
yeah, I mean, again, I think we have to. Banks are moving on a bit, and they have to move on from the usual, long-term fixed contracts. I think they can take some level of risk, but then you need strong mitigants. And what we see, even if off-takers don't want to take the risk, why would banks take the risk? In the Nordics, we see projects which are struggling to get a more than 5 years off-take on this. I don't know if my colleagues have a different view, but so far that's the blocking point in the Nordics, where you have much less subsidies and much less robust policy frameworks. Is the only point missing for us to be able to say that we have financed a big project is the project is struggling to get an offtake.
What to add? And the Iberia perspective.
No, it's. I think Rafael covered a lot of things. Yes, maybe add technology risk. I think is also a key point for us now, especially. Maybe not only focus on bio-CCUS projects, but in general in new energy technologies. At the end of the day, as banks, if we finance on a non-recourse basis, right? At the end of the day, we need this technology to be tested and to be known, right? We also run a strong technical due diligence, with very reputable advisors, etc. And also the guarantees, the guarantee package that the technology providers or the EPC can bring you. I think that's quite important, and it's maybe something that we all, or maybe not, but we forget to negotiate. No, when entering into this kind of supply agreements. Also, the experience of the sponsors. So having people like the companies that are sharing the stage with me, provide comfort to senior lenders, people that have the financial and the technical expertise. Okay, strongly mitigates, a lot of aspects in the project. Of course, having a strong supply agreements in order to try to mitigate, the project-on-project risk, as well as strong offtake with credit-worthy counterparties. I think that's kind of for granted, but just to highlight these additional things.
Okay. Shifting gears slightly, we've talked about public perception, we've talked about financing, the role of policy in this shift. And Marco asked specifically that I wouldn't ask him, so we're going to start with you, and then we'll go back directly to Marco. Just joking. How do you see policy, the current framework that's existing? Is there enough sticks, carrots? What needs to change to really accelerate bio-CCUS? And specifically, if you could speak about your industry.
Sure, very happy to do so, and I think maybe building on what the two previous speakers mentioned from the financial sector side, you need a lot of security in order to be able to put a project into motion. So you need maybe not ironclad, but you need very strong offtake, you need strong partners. And even when you look at trying to find the right kind of financing at the right kind of time or the right kind of subsidy, you look at European rules very often when you're a small startup or a small company. If you look at certain devices such as the hydrogen bank that some of you may have heard of or other schemes, you need very strong financial backing behind you that might be very difficult to have as a small company or a young company for certain projects. So that means we need a supportive policy framework behind us, and we need that to bring everyone in line. So maybe looking at the production side and then the offtake. I think for the production side, I mean, we have it in the title. Bio-CO2 is moving from liability to asset. Even in the public discourse, for decades, the only thing we connected with CO2 was reducing or avoiding or stopping completely. Now we're moving into an idea of, okay, maybe CO2 has a value. CO2 in product, CO2 in permanent storage, CO2 in temporary storage and product, CO2 in very temporary storage in fuels. And I think getting everyone in the policy circles, but policy makers, and I'm thinking European institutions, I'm thinking national institutions, getting people to understand that not all of these are treated equally today is already very difficult. We're moving from a world, I'm thinking about my colleagues in financial sector here, taxonomy was the big discussion 5 years ago. A whole scheme was created around CO2 that only defended CCS. CCU was nowhere to be found. CCU had no value. Infrastructure could only be developed to bring it to storage. That kills instantly any project that would need large-scale infrastructure to do so. That's not our model because we get it on site, but if you look at the market development or if you look at e-fuels in general, if you cannot get some kind of connection or some kind of support to transport CO2 from where it's produced and emitted to whomever needs to use it, that's going to make it very difficult to get all of the budget lines to stick and your financial request to stick when it comes to a bank or joint investors. So on the production side, I think, again, a lot of clarification on what can be done, what is allowed, until when, potentially. And from the offtake side, I think, again, in order for something to be financially interesting, I mean, you always have the carrot and stick. So either you provide subsidies, incentives. We discussed feed-in tariffs just before. They've been great so far. They're stopping in most countries. What comes after? And in most of our discussions that we've seen on projects and projects that we're currently developing, agricultures are starting to turn around when we're looking at anaerobic digestion on agricultural land, but that might be also waste. If they're moving from a world of very stable 10 to 15-year visibility on feed-in tariff to a world where there is either no scheme or a limiting scheme with regards to what they can be paid for what they're producing, either they accept straight away to close down, and then all of the capex that's been invested, they have to find out either they've already rolled it in somewhere or it's considered lost, or they have to find new ways to reinvent themselves. And valuing the CO2 for e-fuels, of course, we would favor the e-fuel route, but for e-fuels or other products, whether it's permanent CCU or whether it's storage, is the way to go. And if we look at e-fuels, if you don't have an incentive to move from what you currently consume as an off-taker, whether it's the maritime sector that's looking at moving from heavy fuels to LNG, ammonia, or other hydrogen derivatives, if you don't have something that pushes you to do it at European level or globally, there's no reason that you're going to reduce your margins if you're not being obliged to do so. Voluntary markets exist, but they're very limited in scope, and they shouldn't be undervalued because they've been great, support in the past. You look at companies like Lego, Patagonia. When you have small targets for renewable energy purchasing, whether it's only power or other fuels, of course it creates supply in the market, it creates movement, but you cannot create a full-scale global market based on small voluntary markets in very specific sectors.
You're not getting that industry-wide shift that we're aiming for.
We're hoping to get it by 2030, but again, it's about implementation.
Yeah.
And then it's also about around the corner from 2030, because when we speak to off-takers, they're currently between betting on implementation not happening and them just shorting whatever is going to happen if it's being implemented, and then saying, well, if it's an obligation in 2030, then 2031, then it's gone. So we have an obligation for 1 year and then it disappears. What do we do? So it's let's say it's a long discussion that has been going on with policymakers, the markets, and I think across member states, but it's still not over. And I think book and claim systems or facilitating market exchange. I'm going to say the magic word in Brussels, which is union database here, which might ring a few doorbells or alarm bells. But if you're able to trade virtually by injecting into the grid a Spanish e-methane produced in the south of Spain and consume it in the north of Denmark through the gas grid, I mean, that opens up a whole new world for the market.
Olivier, I'd love to hear your perspective on this, on the policy, carrot stick, and how your view, what you're hoping for to see in the coming years, either to change or to hold on the existing policy regime.
I think, what has been said is pretty clear, and I agree with that. I would add two things that are really basic. The first one is we're talking of long-term investment, heavy investments. And I think Raphael mentioned that very clearly. Whenever you make an investment decision, you need long-term visibility. Otherwise, there's no way you can build a business case, an investment case. So, clear policies and stable regulatory framework is a must-have. Otherwise, nothing's going to happen. Everybody's going to wait for things to clarify. And that's the main risk, in fact. The second thing is, it's good to have the regulation that pushes, that supports, that clarifies, but I think we need to be very careful not to ask for a strong disconnect between the technical economics and the regulation. Because if it's the case, so even encouraging things that are going to be competitive in the medium term is a good idea. Pushing things that are never going to be in the money is a losing game in the long run. Because sooner or later, regulation will have to change, because people will argue, and they might be right, that Europe is never going to be competitive, that we're losing market share, that industry is not there anymore. So we need to push things in the long run, and it's our responsibility to do so. That makes sense from a technical and economic standpoint. That's what I would say.
Yeah, I see. By all means, please.
Just one thing on the business model I just wanted to say. Maybe it's because I just got British recently, so I keep talking about the UK. But in the UK, they are consulting right now on the bioenergy to power business model, which, so you can see online the consultations, and people have already responded. I think it's also a good way that they do in the UK is to always involve the industries. So they are talking to banks, they are regularly consulting and seeking feedbacks from the industry. I think it's a very good way of doing things. And so yeah, on the just one example, but on the bioenergy to power business model is the way they are looking at doing it. Again, is CFDs. It's basically in summary, two CFDs. One CFD for the power price that you will sell your electricity to, based on assuming that the plant will run base load, and the second is on the price of CO2. So it's very simple in the end. It's a CFD. You get a fixed price on CO2, because today we don't know if the voluntary carbon market is not very liquid. You might not actually be able to sell your CO2. So fixed price on CO2, fixed price on power. A very simple model, and let's see if it works. It's probably going to evolve. I mean, if you look at the consultation, I think people are making fair comments. I think, for example, I was reading a comment from somebody who said that it should not be I'm not going to go into too much details, but basically it's good to see the consultation and to see how people are responding. You see also all the NGOs, and maybe we'll talk about it after, all the NGOs being also a bit concerned about the certification of biogenic CO2. Where does it come from? How do we make sure that it's actually biogenic? And I think that's also a big point that we haven't had time to cover today, but it's probably a big point. And you want actually to keep trust of the people, to avoid like scandals. Like there was actually one scandal with Drax Power in the UK who had to pay a fine. You want to avoid that, to keep for people to actually trust that it's not greenwashing and that the biogenic CO2 is not coming from Brazil. It's actually coming from the country and not too far away.
Yeah, it is critical, the certification of origin as this industry develops. Marco, from a long term, let's say 50, 100 years from now, we can look back. What do these next 5 to 10 years look like? Is this going to be a time when there's actually going to be a big shift? Or was this time just an expensive detour towards full electrification of a lot of different industries?
No, it's the time to shift things. Now it's the time. I think the next 10 years are going to be the most relevant ones on the technology perspective, okay? If we look for the future, I think if it's a Venn diagram, you have 3 circles: technology, regulation, and finance. And honestly, but I'm suspicious to say this, of course, technology needs to drive this. We actually need to invest a lot in technology to bring solutions that in the end of the day will be economically viable, that will solve the issue, that will comply with regulation. At the same time, and Olivier said something really important, regulation needs to be nearby the knowledge and the technology development part, okay? I'm going to give you one clear example. For sustainable aviation fuels, we have a goal of 1.2% in 2030. FID of those e-fuel plants should be happening this year, and they're not. So why? Because there's actually a gap, and that's a good thing. That's a lesson for us to learn. So I would say that the next 10 years we need to invest a lot of innovation. We need to allow people to innovate, to test, and to try things. Going to give you one very short example. Galp invested on Net4CO2. Net4CO2 is an institution that does carbon management. They have a catalytic reactor, a proprietary technology. And the other day they called me and said, you know what, we were using this type of metal alloy that costed a lot, and we realized after 10 years that we can use plastic plates to do the same thing. And this will reduce the cost by 200%. And financially, this will make sense. So we need to invest. Those next 10 years are our time to invest and to make the future. Thank you.
Thank you very much. We are 2 minutes over time. I know that some of our guests, our speakers, need to run. So I want to thank you all for your contributions today, your perspectives, your insights. And thank you all also here to coming. And I hope you have a wonderful afternoon.